Good morning, everybody, and welcome to the October briefing with myself and James. We're out of lockdown, James.
We are, thank God.
Yeah, so we have decided to trial this month's briefing back in the office. So sitting side by side.
Strange feeling.
COVID vaccinated and good to go. So first of all, thanks a million everybody for the feedback from the last webinar. We got some really good feedback, so we appreciate that. And because of that, we're going to make a few changes in terms of the topics and what we're going to talk about. So first of all, people are always asking who are the team, so we'll go on about the fact that there's 8 of us sitting over here in Dublin day to day. So there's myself, obviously, Johnny, who is head of mortgage division and drives on the mortgage business that we do day to day. Canavar looks after our Asian financial team. Brendan's actually just retired for the second time. Brendan was working with me on a project with Solus and on pension administration, but he's still there on a consultancy basis. And then Georgina runs the office with Stephen and Gemma, and James obviously is in, but very much so James on an investment capacity, so helping with our investment clients and pension clients. And Danielle is driving our marketing activity, so which obviously encompasses these webinars on a monthly basis. So she's always asking us when's the next video, so that's what we're trying to cover today. The second bit of feedback is the time. So we were running these webinars and we're taking about half an hour.
Yeah, we just want to cut it down a little bit more, you know, so a bit more digestible stuff.
Exactly, get it back down to the 10-15 minutes. So we actually have a clock sitting in front of us here for 12 minutes. So let's see how it buzzes. Okay, so just gonna give you a quick overview of what we're aiming to cover this morning. So just again, an introduction to the team, an introduction to the company. We're going to talk a little bit about cryptocurrency again. Then we're going to talk, James is going to talk about solar energy, but energy in general, and touch then leading into the global economy, talking about stagflation and the issue not just in North America, but across the developed world with filling employment. And then just taking a look at the European market. So every month we're going to talk a little bit around a particular market to give you a little bit of insight on what we're looking at, what we might see as an interesting take. Last month and the month before, 2 months ago, 3 months ago, we were talking about Ethereum, and hopefully some of you listened in on that. Last month we talked about uranium.
Yeah, and uranium has done well now.
Especially well
this week, the last 5 days has, you know, big gains in a lot of the miners. You know,
big gains as in 25% gains.
Those types of gains. But so hopefully someone has saw that and took the opportunity that we saw. So.
Yeah, might be a little bit of time, might be time for a little bit of profit taking if you did listen in last month. Okay, so just with regards to cryptocurrency, why are we talking about cryptocurrency as a regulated financial broker, a small little brokerage sitting over here in Dunboyne? Why are we talking about cryptocurrency? Well, first of all, we both have an interest in the space. So, from a personal perspective, but secondly, we are getting asked about cryptocurrencies from our investment base. So it's in relation to pensions, in relation to capital, cash investments, in relation to what's hot, what's not. So it's not a space that you can ignore, and especially based on the size of it. So what do we just want to touch on this month is the size of Bitcoin, and it's not really in relation to the value of Bitcoin we want to focus on. I want to bring your attention to it's the size of the transactions, or the value of the transactions that the Bitcoin network can now facilitate. And it's basically Bitcoin, referred to as Bitcoin 2.0, but the space or the concept is the network capacity. So what does that mean? It means what volume of transactions can the Bitcoin network handle or take. And what we're focusing in on here, guys, this morning isn't the actual value. It's this little graph here, which shows the number of coins that can be traded per wallet. And it's now reached a capacity where the wallets can trade up to 3,000 Bitcoins per wallet, which based on the current valuation of Bitcoin, it's a little bit over 150 million. So that would mean if you're fortunate enough, listening in this morning, that you happen to have 3,000 Bitcoin in your wallet, you could actually carry out a transaction to that value. So it is phenomenal where the space is going. in terms of the growth for that transaction volume, it's increased by 160% over the last year. And what it very simply does is it brings the blockchain capacity to cover this space called NFTs, so non-fungible tokens, which has really taken over.
It really has, the last couple of months,
Yeah, and we might touch on NFTs next month, but just again to draw your attention to the volume that the Bitcoin network can transact. Why are we showing this this data here? And we've highlighted a couple. This is the volume, the value of Bitcoin, and we've also highlighted there, just as almost as a joke, the Dogecoin volume traded in the past 24 hours. So Bitcoin, as of this morning, had traded almost $40 billion worth in the previous 24 hours, and Doge had traded 1.4 billion in the previous 24 hours. How does that compare, James?
Well, if you look at Google on an average trading day, it was about 1.6 billion. So Dogecoin is nearly the same as Google in volume trading. So it's definitely something you need to look at and follow.
Yeah. So what that's basically highlighting is the volatility and the liquidity in the space. So regardless of the spot price or the price of the actual asset, Apple will be the largest traded stock.
Yeah.
And Apple's volume will trade anywhere between probably around 7.5 billion to maybe on a very, very busy day, 15 billion.
Yeah.
So in that type of range.
It does deviate, yeah.
It will deviate. So it's obviously going to be busy days, pre-earnings, post-earnings, that kind of time frame. But in general, or the iPhone 13, I think was a little bit of negative noise around it. So there'll be times when certain stocks will have more activity than other days, but just to kind of give you the averages, you're talking Google trading somewhere between 2 to 3 billion on a daily basis, Apple somewhere between, let's say, 7 to 10 billion on a daily basis. Yeah. You then compare that with Bitcoin, you compare it with Ethereum. Significant volume's been traded there. It doesn't mean that the volatility is can be ignored. It's just the liquidity. Okay, so if you are in these positions, you just bear in mind that you can enter and exit.
Yeah.
Pretty much at any time of the day. Okay.
Yeah.
And then the whole space or the whole noise around Bitcoin ETFs. We're expecting some news over the next week or so, and that's what's driven the price over the last
I
fortnight.
definitely think so. Yeah, and it's more and more, I suppose, positivity towards it, and no news is good news on the SEC's part.
Yeah, so what this is basically about is ETFs will bring the cryptocurrencies into the 401k marketplace. So if it opens up to the 401k, that's pension markets for the uneducated or the unknown among us, and that is a gigantic $1 trillion marketplace, multi-trillion dollar marketplace. So if it opened up to that market, institutional investors who are already in the space, become more exposed. Okay, so that's it in terms of the cryptocurrency. So moving on to the energy market. So what do you want to cover there?
Yeah, so we're going to talk on a couple of different topics. So I think in the last webinar we had said we were going to touch on solar. So I thought this was a really interesting chart. So if it's red or this type of color, it means that countries are reducing the total amount of supply of power from solar. So you can see generally across all the countries, it's increasing. Now the biggest leader is China. So I just thought that was a very interesting chart, for viewers to have a look at. And then some statistics or facts, I suppose, with solar. So since 1977, the price of producing solar panels or solar energy is down nearly 99%. So that's great going forward. It means it's cheap to produce.
Significantly cheaper.
Significantly cheaper.
Yeah. So for ethical investors listening in, and we get asked a lot around ethical-based investments, what we always are saying to clients, the caveat is you don't build a solar panel or solar panels or solar technology out of thin air. So it is made from metals, it is made from rare commodities. So there is an element of non-ethical
maybe
investing
to get
there. Yeah, but it's the energy then that it generates is of the clean nature. It's the same as water. I think we touched on water a couple of months ago, and it's something that we have an affinity towards as a clean energy as well, and as a commodity to invest in. So yeah, very interesting point. And there are investment structures out there for solar if it is something that floats your boat.
Yeah. Okay. And China will be the biggest, I suppose, user of solar. You know, in the past couple of years, it's been a dramatic increase, and they would export quite a lot of solar across the world. And then the final thing, I suppose, what we'll leave it on is it's the most abundant, you know, resource that we have. It's coming from, you know, the sun, and that's not going anywhere. So another one that's interesting, and it's kind of you know, bargaining in terms of shares actually becoming available that have exposure towards geothermal. So it's something that's not really here yet, but something in the future that could be interesting. And it is geothermal energy. So again, quite simple. You know, there's a couple of different variations in how they actually produce the energy, but this will be the most common one. They're trying to find the hot water, and then that powers the turbines to actually make the power. And if you actually were to look at Europe, the geological studies, about 25% of Europe could quite easily use geothermal energy. So it's really just how close the hot water is to the surface, and is it feasible? So
is it economically feasible in terms of the price?
Yeah.
We know it's there. The issue is like oil. Is it economically viable? Can they raise the money? And number two, if they can, is it going to turn $1 or €1 in this example? Is it going to turn a coin for the investors? And that ultimately will drive whether or not the concept takes off. But as we push towards clean energy, you know, the green agenda, it's something that is not really tapped into as a space.
Not yet.
Exactly, not yet, and that's where we're bringing it to the listeners. Okay?
Yeah, so bargaining in terms of there's about 3.5 million households in the US that use it, so a huge scale to grow. And the final point I'll leave it on is huge adoption in New Zealand and Iceland. And why is that? They have the hot springs.
Yes, they have, correct. Yeah. What does that mean then in terms of investing?
So this is another thing that we're going to talk about. And it's quite interesting in investing. So ESG, ethical investing, seems so obvious that it's going to be a good trade. Another huge catalyst was Mr. Joe Biden getting into power. So as you can see, the run up to the election. So firstly, I'll give the introduction. So this is the BlackRock Global Clean Energy Fund. And in the run up to Joe Biden, who is very pro-green energy, and there was the whole Green New Deal of $3 trillion.
Push for offshore solar, wind energy, a lot of activity there. Yeah.
Huge run up. And this is right around when he got elected. So it just went back, just as he got elected. So as investors, you're thinking to yourself, Joe Biden just got in. He's pro-green energy. This is the time to start buying clean energy shares. But in fact, it is the opposite. And right now, we're down to about 33% in that index.
Back before the run up occurred, again, does it mean that you go and you put your house into clean energy investments? Not necessarily, but you come to us, you've got a renewable energy or a ethical investment philosophy or methodology. This is something that we're going to look at with you. Okay. So just again as an FYI. Okay.
Yes. Okay. So I suppose part of the entire topic that I was talking about energy was the contrast between clean and dirty energy and what's going on in terms of investing and how it's impacting the financial market. So why is oil, why is natural gas, and why is things like coal doing so well? Well, a chart like this will help you try and understand. So this here would be referred to in 2019 as what they were proposing to spend or capital expenditure on drilling and exploration of oil. So this is what they were going to do in 2019. This is what they actually done.
Yeah, so Saudi Aramco, the largest
one of the largest companies in the world,
a
$1 trillion company.
Exactly, yeah. Just for those again that aren't aware of the company.
Huge. So I mean, you can see here across the board, just so again, the right side of the chart here, it shows how big of a drop in actual spend on capital expenditure it was. So across the board, you could nearly say on average 35-40% of a drop in capital expenditure by all the largest oil companies in the world. So if capital expenditure goes down, supply will go down. And if supply goes down and demand stays the same, prices
go one
increase.
direction.
And you can see it here. We've added in here about the landfill, but
actually next slide, sorry.
yeah, so we'll just jump around here. So you can see here oil, up at 82 just from this morning, multi-year highs. Now whether it continues or not, it's a different question, but there's absolutely no doubt that from the 40s to the 80s, the main reason for that was lack of supply, and that was down to a reduction in capital expenditure. So again, natural gas is the same thing. A little bit more worrying, especially with the dynamics of how Europeans get their natural gas, which is from Russia, who typically geopolitically we don't have great relationships with. I suppose we'll just jump back, I suppose, to the landfill market, if you wouldn't mind.
Okay, yeah, sorry, we had the slides mixed up there, guys. So yeah, the last piece then in the energy space is the whole idea or the concept or the debate around landfill versus incinerator versus renewable packaging. We're miles and miles off where you're going to go to the shop, fill your basket of goods, or any type of retail purchasing. Where you're filling your basket of goods with 100% renewable packaging or renewable technology. That's not the case. If anything, the increase in waste produced, and this is UK stats, our neighbour obviously, the increase is on average about 3% a year. So that means that we're generating more waste year on year on year. In fact, as a result of the COVID lockdown, those stats were a multiple of that. Why are we highlighting this? Because there's an Irish company that are raising capital ongoing over the last 2 years to build incinerators in the UK. So obviously there's the ongoing debate in Ireland whether or not it's a technology that we want to have exposure to. We do have a couple of sites in the country that are working at full capacity and I believe well received to a large extent within their communities. But the rollout of additional technology, I'm not sure if it's going to happen in the short to medium term. Yes. And again, we're not going to highlight what's going on in the papers. But why is it relevant? The Irish company, they're currently capital raising to build these incinerators in the UK. Not only that, while this currently will be a non-regulated type investing, they are looking at proactively at the moment getting the investments regulated, which will be a gigantic step. So if they are regulated, that means they fall under the investment compensation type schemes in the relevant country where the fundraising occurs. And the idea behind the incinerator, while it's not wholly clean, it is taking a step towards getting, obviously it's a step towards renewable energy in that the output is renewable. Number two, moving away from landfill, which is obviously a huge problem, especially if you live in the vicinity of landfill, and the move towards carbon neutral. And obviously if you're generating energy from these incinerators, which the UK is, and up in Drogheda, Drogheda in Indover, they generate the power from Indover is enough to, it's not the whole of Drogheda, but it covers a certain percentage of the population. So it has a lot of positive side effects.
World use.
Exactly, yeah. So again, just talking about energy this morning, we'll skip CapEx for now. And then in relation to then just very simply in terms of the global economy.
Yes, okay, so and it's becoming more and more prevalent as the months go on, but this is a great statistic here that's done month on month. It's a survey from 4,000 large North American businesses, so this is everything from professionals like JP Morgan's right down to McDonald's and so on and so forth. So as you can see, the most recent figures, a huge jump in openings. So businesses need to fill these jobs, but the applications are dropping and they're down around the tune of about 15%. So that's the first takeaway. Employers are struggling to fill jobs, and this actually is a type of inflation. So there's inflation, stagflation. There's so many inflations, but this is called stagflation, and it is typically something we're seeing at the minute. So this is when GDP decreases. There's a higher rate of unemployment. So I don't want to go back to the last slide, but you can see it. There is less people getting jobs. And there is some big problems with the economy in terms of supply chains. That is increasing inflation. If you look back to the prior charts of natural gas and oil, that's all hurting consumers' pockets. So it really is just a kind of a not a good scenario. Whether we go into a stagflation or not, it's a different question, but it is looking like.
And what it can mean for markets then, obviously, from an investment perspective.
Yeah, so not too good.
No, wouldn't be a positive indicator.
Yeah, definitely. The higher inflation goes, the higher bond yields will have to rise, and valuations and shares will have to come down along with it, Okay, so then I suppose the final thing that we have is European markets. So this is from Schroders, very, very interesting. And the typical consensus on Europe is it's the old economy. So it's just full of financials, industrials, things like that. But if you actually look at this particular fund, and a lot of the funds will be similar, based off the MSCI, you can see it's changed from 2010. So financials has dropped by quite a large chunk. IT has jumped nearly threefold in terms of weightings, and consumer discretionary companies like Adidas have also, increased. And this is really good because, that means Europe will perform better in the future, because these are what will lead markets and not these.
Yeah.
And then I suppose a fund that I personally have exposure to and we've been getting clients into is the 5-Star 5 Europe fund. And I mean,
which is a Zurich fund.
Which is a Zurich fund, and great performance so far. I mean, we are only 10 months, and so there's still a way to go. I definitely think it'll probably finish in around the 20%, and even the 1 year chart on this is even more impressive. So definitely Europe is a good place to look for placing some capital.
Yeah, if you're looking for investment opportunities away from North American equity markets, the rationale for this morning's second look is exactly that. So European equities, with whether it's the Zurich 5-Star 5 fund or Standard Life have a European fund. Most of the insurance companies have an equivalent European fund. We just happen to like the 5-Star 5 fund based on historic performance and the company selection underneath the fund. So that's it for this morning, guys. So it ran over again. We'll have to get better at our timekeeping, but hopefully you found it interesting. So it's summarizing. We're talking again a little bit about the cryptocurrency space. So let's see where that goes over the next month. If you are exposing, again, remember it's a percentage of your capital. Don't overexpose. Dollar cost average or euro cost average is always our preferable way to get into something that's highly volatile, and cryptocurrency is a highly volatile space. We didn't mention it actually at the slide. Aviva had provided exposure to cryptocurrencies via 2 ETFs traded on the Frankfurt Stock Exchange, to Bitcoin and Ethereum, and they've removed those removed exposure to the two ETFs in the last 6 weeks.
That's correct.
We only found out about it a fortnight ago, which is unfortunate because they were leading the way. You can still get exposure to these strategies through pension money, obviously, but it does have to go through a different platform, a different structure. So again, just as an FYI, in terms of cash, you can open an account with any of the larger providers and get your exposure. Energy we've touched on. Again, if you want to learn a little bit more around those alternative investments, come back to myself or James. And then the second look was the European equities. So hopefully you've all taken something away from this morning. And again, appreciate the feedback. Send it on to us. We're always welcome to feedback. And one of the things you did ask us not to touch on this month was the funds. So the Zurich funds, the New Ireland funds, the Irish Life funds, the Standard Life funds. So what we're going to do there is quarterly look.
I think that's better because the movements month on month sometimes they're just too small to really leave an impression with the viewer. So I definitely think quarter, you'll definitely see a more of a impressionable change to really see where the funds are going.
Great. So guys, listen, we're going to leave it at that, and we thank you for listening in.
Thank you very much, guys.
And we will talk to you again in the subsequent briefings.